Good day. We've got CEO Steve Dalton of Revolve Renewable Power joining us today. Revolve is a developer of solar, wind, and battery renewable power generation projects in the US, Mexico, and Canada. The company just released profitable Q1 fiscal 2024 financial results, and Steve is here to tell us about the quarter and the company's outlook going into 2024. I'm Martin Gago with Market Radius Research. It's Thursday, November the 30th. Please remember, this is neither recommendation nor investment advice. Steve, thank you for joining us. Congratulations on the profitable quarter, and please bring us up to speed on how things are going and what's happening at Revolve.
Yeah, hi Martin. Good to talk to you again. I think it's only been a couple of weeks since we had our last call. So I mean, a lot of the things that we reported on this week are kind of consistent themes and messages, I guess, that we've been saying pretty much all year. But you're, like I'd probably say, in every quarterly report that we do, you're kind of seeing a steady build-up of the strategy that we've kind of outlined to the market probably since last year. So we reported kind of record quarterly revenues for the company of $1.2 million, higher than the full year last year. So again, you're seeing this incremental build-up in revenue, which is what we're targeting. A lot of that was fairly well flagged in that we received a large milestone payments from the transaction that we done earlier in the year to sell some of our utility scale projects in the US. So we had indicated that we were going to be booking revenue from that deal in Q1. So I think it's consistent with what we've been saying back in, I think it was August, we announced that. And yeah, a lot of the other key messages, as I said, are fairly similar to what we said before. Like, we're continuing to work on a number of the DG or distributed generation projects that we have either in construction or letters of intent signed. And there are still busy working away on our kind of mid to late stage projects on the utility scale side of the business and trying to get them ready to build over the next kind of 12 or 18 months.
All right. And your revenues are broken out into roughly two categories. The big transactional revenues that came through, and just power generation revenues, to call it that. So the transactional ones are lumpy. They come in as things happen. But on the power generation, that should be pretty constant quarter to quarter, maybe a bit of variability in wind and solar and availability of those things. Can you just break that down, the two sides of your revenue equation?
Yeah, it's exactly as you said there. I mean, we have our distributed generation business, which are kind of long-term recurring cash flows, contracted revenue on their PPAs with industrial companies. We indicated last year when we closed the acquisition of the Centrica portfolio that was going to generate, give or take, around $400,000 of revenue per year. We're pretty much trending that. We've obviously added another project over the course of last year to that as well. So you're seeing that pretty much consistent kind of quarterly revenue now been coming out of that part of the business, if you like. And then, as you say, the utility scale, at least for the moment, is mainly driven by kind of large milestone payments that we've managed to get from projects that we've sold. So I think in our FY23 accounts, you would have seen initial payments that we received back in January from that NG transaction that we've done. We've now received the second milestone from one of those projects in August, like I mentioned. You've seen that come into this quarter. So they're a bit more ad hoc in terms of, like you say, they kind of drop into quarterly accounts and wouldn't be consistent, albeit we have let's say a milestone schedule around those projects and fairly clear, well-defined milestones that we've indicated to the market. So we have an idea of the amounts that we're due to receive, when we're going to receive them in terms of what milestone is triggered. And the thing that we probably can't maybe foresee is exactly when the milestone will be met, because now the projects are owned by a third party such as NG. So yeah.
And on your distributed generation projects, those are projects that you're going to own and keep a monthly recurring revenue coming off of them. Can you talk about that, how that pipeline of projects is building and how you expect to see the DG business and revenue grow over the coming months or the coming year?
Yeah, sure. Again, I think we've been communicating through the course of the year around how that pipeline has been building up. So it's kind of stayed at around 150, 155 odd megawatts. That's principally down in Mexico. We are starting to see some activity in the US and also the Canadian market. So we're expecting to hopefully see some projects come through there. And really what the team has been focused on over the last 3 to 6 months is converting that 150 odd megawatts into actually signed PPAs. We've obviously set ourselves a pretty ambitious target for this financial year, which will be to June next year, of 40 megawatts under construction or operating. So we have a good bit of work to be done on that side of it. We do have some letters of intent that we've actually signed, so customers are kind of committing to their projects. We're in the process of trying to convert those letters of intent actually into PPAs. We have a couple of projects that we're working on that we've, I think, identified to close by the end of this year, and then hopefully that momentum will bring us into the start of next year, and we can actually start seeing a lot more conversion in that pipeline. But that's really what the DG business is about now, where the huge focus is. It's just converting the opportunities that we've managed to generate since we acquired the Centrica business.
And is the general strategy for DG is that you're going to keep those assets on your balance sheet and then harvest the revenues and profit off of it, or maybe strategically sell off a few of them or some of them, or and then use that cash to fund more operations? What's the vision or the plan for the DG assets?
Yeah, no, the plan is very clear. It's to hold on and operate those projects, and I mean you really get the benefits from the DG business when you have scale. So like we need to be owning more of these assets. We need to be out there building, owning, and operating them. So it's definitely a build and hold model for that side of the business. And again, because it generates that kind of long-term recurring revenue, the idea is as you can continue to build these out quarter by quarter, you'll start to see the revenue kind of stepping up over time.
Yeah, and then you'll see that build up, and then you've got more flexibility or leverage, I would think, to then take on larger utility scale projects or operate at a bigger scale as the operating cash flow continues to consistently grow.
Yeah, exactly. And like, again, if you look at what our strategy and what we put out there, we've said, okay, we're going to continue to build DG projects over the next 2 years, but obviously beyond that as well. And then once the smaller end of our utility scale portfolio, the 2 projects I think we highlighted again in this presentation, we've been talking about them all year, the Vernal project, the Primus project, once they get ready to build, they're projects that we think we can actually do ourselves. And obviously they're another step up. So I mean, the strategy for the company is again just building incrementally, step by step, in terms of where we're trying to get to. That's an owner and operator of renewable assets, long-term recurring cash, long-term recurring revenue, but it's trying to do that in a fairly managed and incremental way, with a view to kind of, I guess, optimizing the capital we have available to us to the extent that we can.
All right. And in developing renewable projects, one of the elements in terms of when you're building out the costs and that is the cost and availability of the solar, the batteries, the various equipment that are required. Is the supply chain functioning pretty normally? Are prices sort of amenable, working on your side? Because that's the whole point of renewables. Or cost curve should always be declining on that. How are the costs shaping up while developing your portfolio?
Yeah, I think we probably spoke about some of these points before, and I think what you saw over maybe the last 18 months, 2 years, is obviously the price of renewables going up a lot, like a lot of things supply chain related, and the cost of everything has just been going up. I think what you've seen over the course of probably this year is some of that softening, particularly on the solar panel module side, to a certain extent on the battery side, but it is very dependent on market to market as well. Obviously the US, there's more incentivization around local supply chain there. That supply chain is now starting to ramp up with a lot of the federal incentives that have come on, and there's been a lot of announcements around new manufacturing coming into the US market as well. So that all just takes time to get going. Mexico probably less reliant on local supply, and I mean, you have a mixture of domestic and both international panels and battery storage facilities coming in, and wind as well. So it really is kind of project by project or an area by area. But I think in general terms, there seems to be a bit of a softening on some aspects of supply chain. I don't know if you'd call it normal, because I think renewables kind of goes up and down depending on individual markets. But I think it's certainly improved from a couple of years ago for sure. But there are still challenges there. I mean, if you followed the results of any of the wind turbine manufacturers over the course of this year, they've had pretty big challenges, and sustained various losses. But so there's pressure on that part of the business for them to right size that, and that's going to impact pricing. So there's still a lot going on when it comes to supply chain. But I think for us, because we look at projects on I'd say as and when they're ready to build, you can do your assessment around, okay, what price of power do you need to get the returns that we're after at that particular point in time.
All right. And the price of power, the PPAs, the long-term power contracts the offtakes that you take for these projects, it's very regional within states, provinces, or even districts within the states. Can you give any commentary on what that market is looking like?
Yeah, again, it's fairly regional. I mean, when you look at the US, there's I don't know how many markets that are within one market, and they're all kind of structured a bit differently. I think in broad terms, what you'll find is with increasing prices of equipment, PPA prices have gone up in certain markets, but it does really depend. I mean, if you look at the Mexican market, they have a lot of natural gas. A lot of that natural gas comes from the US, but they also have other heavy fuel oil components in their energy mix. So an increase in fossil fuel prices drives up the price of electricity, which then helps renewables be more competitive. And the US, as I said, is a very regional market, so it's kind of hard to give an overall comment on that. But you've certainly seen some commentary recently that PPA prices have started to go up a bit. But it's a competitive market. There's a lot of projects there. And a lot of people looking to get PPAs. But I think still, if you have the right projects located in the right area, there's still the demand for renewables, either been driven by some of these federal incentives, obviously, that we see, or the corporate strategies around sustainability and everything else. And I think we've commented probably on in recent webinars and podcasts around what's happening in Mexico, and a lot of the industrial customers down there still having a very heavy focus on trying to shift their energy supply to renewables, and that's driving the need for PPAs.
Yeah. Does that also include where they're sort of self-sufficient? Maybe the grid isn't as reliable, or just so they know we've got battery on site. If there are power issues, we're a much more reliable and robust power supply to fund our operations.
I think in Mexico specifically, it's a bit of both. So in Mexico, you have a challenge of just the actual quality of power, the availability of power, particularly when the economy, or certainly parts of the economy, are growing very strong. There's a lot of inward investment because it is nearshoring. So in those scenarios, you are seeing an interest from potential customers, but mainly around DG type of solutions. So maybe they want some battery storage as a backup, some rooftop solar, maybe a CHP. And I think that's where we see some kind of nice synergies between the two businesses down in Mexico in particular, that you could be talking to a customer about a long-term PPA for a large amount of energy from one of our utility scale projects, but they're also looking at it at a factory level or a manufacturing facility level to see, okay, what can we do at a local level to increase power quality, power availability, security of supply, or whatever it is. You can have both of those discussions with them.
All right. And I get finally the funding environment. We've talked many times about the yield curve and how you operate more on the further end on the yield curve, which hasn't shown the same volatility. Any comments on the ability to raise capital for green projects?
I mean, again, I think we've spoken before about it. Like, I don't think there was ever an issue around the availability of capital for green projects. It was really about the costs, and I think I've made the point a few times.
It's always the cost,
okay, yeah. The back end of the yield curve wasn't as high as the front end. I think actually, even in the 4 weeks since we spoke last, I think you've seen the interest rate environment in the US turn around not completely, but certainly soften a lot now. We're talking about rate cuts next year. The yield curve has come off, so things can change very quickly. But yeah, I mean, I think in general, still a lot of appetite and capital for renewable projects. There's no doubt about that. It's just about pricing. I think for us, similar to what I was mentioning on the supply chain of things, you only really make those decisions at the time when you have a project that's kind of getting to ready to build. So while we have financial models and we constantly look at the financial models and we're repricing them just to stay up to date, until we actually have a project on a utility scale ready to build, you don't really have to make those hard decisions around, okay, where's the financing, what's the cost going to be? The DG is a bit different, but as you know, like we've used royalty financing for that before. We see ourselves continuing to use that going forward. We haven't seen, I mean, there's certainly been a slight increase in the cost of financing for our DG projects, but I think actually as we get scale behind that part of our business, we'll hopefully be able to get the cost of capital down overall.
All right. And I think finally here, you announced several milestones you're expecting for the business on both the DG, how many megawatts you expect to have in construction or build. Could you just give a quick rundown on the milestones and the over the next 6-12 months that investors should be keeping their eyes open for?
Yeah, well, I think what we've done is we set out a strategy. So we set out a pretty clear strategy for both this fiscal year for us, which will be, as I said, the 30th of June next year, and then out to 2025 as well. And what we said is on our DG side of the business for 2024, we're looking to try to get 40 megawatts into construction or operating by the year end. And we've also said we want to do 10 megawatts of acquisitions, which the Wind River will be part of that. So that's kind of what we're working towards. On the utility scale side of things, we've set a target of around 3.5 gigawatts within our pipeline. So again, our development team, we've been put out a couple of different initiatives over the last probably around 6 months around building up our pipeline, particularly in the US and Canadian market. So I definitely think you're going to see us more active there. In the news release we put out, I think we've indicated some specific targets for the US and Canadian markets for this fiscal year. So definitely we're going to continue to try develop the pipeline, build that out. And then, like I said a couple of times, we've still got a fairly laser focus on those near-term and mid-term development projects, being the Vernal project, the Primus project, El 24 Empresa Nueva, to try continue to bring them forward and get them ready to build next 12 or 18 months. So like I probably always say, huge amount going on in the business. Plenty of work to get done, plenty of milestones to be hit. So yeah, I think investors can expect the usual from us, that we're going to be fairly busy, hopefully fairly active, being able to give out good updates on projects getting done and getting developed.
All right. And on the Canadian Wind River acquisition, that's going well, and that should be closing in the near term here?
Yeah, we had indicated early December, so I don't see anything that will change that. So we're still working with the teams just to close out the final conditions. So yeah, we're happy enough with how things are going. Looking forward to getting closed in a couple of weeks and integrating both the business and the team. And then that'll give us a good platform, I think, particularly for the Canadian market next year. There's certainly a couple of development projects that are there and that look interesting for the BC Hydro Call for Clean Power, which is set to be run mid next year.
Excellent. All right, Steve, with that, let's wrap it up here. Thank you very much for taking the time and bringing us up to speed.
Great. Thanks very much, man. Good to talk to you.